Tesla CEO Elon Musk unveiling the automaker's newest Model Y SUV last night. Let's take a listen to how he did it.
It has the functionality of an SUV, but it will ride like a sports car. So this thing will be really tight in corners. And we expect it will be the safest mid-sized SUV in the world by far. The basically long-range one we expect to be about $47,000. And then sometime in 2021, we'll have the sort of standard version, which will have a $39,000 price point.
All right, so there you go. The most affordable Model Y starts at, as you just heard Elon Musk saying, $39,000. But customers will have to wait until 2021 for that price. Tesla will first sell more expensive versions starting from $47,000. So guys, obviously there's a lot of question marks around how this one was going to be rolled out. The unveiling of it, though, kind of underwhelmed in terms of what you were expecting, because it looked pretty similar to the Tesla Model 3.
Yeah, at the end of that presentation, Musk said, "I'm bringing sexy back." And I think that people are saying he's actually just really bringing the Model 3 back. You know, it's 10% bigger.
Yeah.
It doesn't even look like a crossover. I mean, people were saying SUV, then it went to crossover, and now people are saying hatchback. The bloggers that are out there that actually got to go in and test drive this model are saying, you know, are very, very underwhelmed. And I think especially because it's going to come out in 2021 and their deadline delivery dates have always been pushed back. And a lot can happen from now to 2021.
Sure. Not the least of which could be also important to Elon Musk at the helm of this company. As we know, he goes back and forth with the SEC. That's another issue entirely different from this. But I mean, when we talk about the car, you make a lot of good points. That, I mean, this car looks similar. I'm not sure. We talked about yesterday cannibalization of the Model 3 and this model, because they do look similar.
Yeah, well, and I think that's part of the problem is I think a lot of consumers aren't able to really differentiate between the Model 3 and this new model. And when he talks about it's an SUV, but also a sports car. I mean, pick a niche, right?
No, for sure.
What are you going to be?
There's a lot of questions to ask about this, and I want to ask them. We're joined now by Gabe Hoffman, general partner at Accipiter Capital Management. Gabe, let's just get the facts and disclosures out of the way. You're a Tesla short seller, so we got to put that out there first. But what's your take on the unveiling of the Model Y last night?
I think it was a big dud. I believe it was a total disappointment. Barclays, the analyst, wrote that it was a Model 3 with a hatchback, and I'm inclined to agree with that. I mean, as I told Yahoo Finance viewers on March 1st, I predicted that Q1 was shaping up to be a disaster for Tesla. What happened since then? Well, Morgan Stanley and Goldman Sachs both cut their numbers substantially for the first quarter, adding hundreds of millions of dollars in burn, and Elon Musk sort of threw together this last-minute event that I don't think is really much of anything.
All right, well, let's talk about some of those other notes, too, because Morgan Stanley echoing some of those points, JMP Securities coming out and saying that there's still a pretty large demand for some of these larger vehicles, and you can make the case that this car is not necessarily an SUV. But in terms of where you think things go from here, as we talk about demand, do you see this as Tesla having to do something to shore up demand, to drive demand for its cars?
Well, I believe that demand for all Teslas, the Model 3, the S, and the X, did fall off a cliff January 1st when the 3750 partial tax credit went away from the federal government. And we see lots all over the country, a few hundred here, a few hundred there, of excess Model 3 and excess Tesla inventory. Remember, this was the company that was supposed to be building cars made to order custom, and now they're just a car manufacturer with an inventory problem. And folks are going to start looking at projecting financials and what their balance sheet's going to look like at the end of this first quarter, and it might start getting really ugly in my view.
Gabe, we're hearing, and Zach touched on this, that Americans are falling out of love with sedans, but then at the same point, the market for vehicles over $35,000, it's a fraction of what it is for vehicles priced below that. So as an investor, what do these two opposing pieces of information tell you?
Well, people, I believe, need to consider the issue of leasing. That is, electric vehicles that are under $50,000 or around the price point you described, about 75% of them are actually leased. New cars don't get bank financing for leasing because the banks don't know what the depreciation curve will be. In the case of Tesla, Tesla cannot afford to do the leasing itself. They don't have the capital. Therefore, Tesla is at a major competitive disadvantage to a Volkswagen, an Audi, a Chevy Bolt or all of the others who can have the manufacturers actually subsidize and have the lease while you're in your first couple of years of launch. Tesla can't do that, so they can't access 75% of the market.
Well, we also talk about moving this Model Y release up could help as they take those cash advances on these cars as people place their orders. So that might help their cash position. But if things are as bad as you see them playing out, where do you see Tesla's share price going?
Well, ultimately, I believe Tesla's going to be worthless. And let's do some math. Even if you thought that 100,000 people would be gullible enough to put up $2,500 for a car that might come in 18 months and maybe end up like the Roadster or like the Tesla Semi and be an indefinite delay, that's only 250 million. When you consider that Tesla's cash balance is likely to dip by about half as compared to where it was at the end of the year, and you think about their $9 billion plus in debt and a cash burn going forward, I don't know that that's going to make such a big difference.
All right, we'll have to wait and see. Coming off a profitable quarter, we'll see what happens next. Gabe Hoffman, thanks so much for joining us.
Glad to be with you.